Welcome to the Deep Dive. We take complex information, loads of it, and boil it down to what you really need to know. Today, we are diving into Enphase Energy's Q2 2025 financial results call. Our mission for you: cut through the jargon, pinpoint the key numbers, and really unpack the strategic moves Enphase is making. It's a fast-changing world for solar and energy storage, so let's see how they're navigating it. Okay, so let's start with that quick snapshot. The high-level view for Q2 2025, Enphase reported quarterly revenue of $363.2 million. Their non-GAAP gross margin landed at 48.6%. And non-GAAP diluted earnings per share, that came in at 69 cents. Plus, they generated $18.4 million in free cash flow.
Pretty healthy.
Yeah, pretty healthy is right. And what's interesting about those numbers, isn't just the numbers themselves, it's that they signal, well, more than just ticking along. They show Enphase is actually strengthening its finances, building profitability, generating cash, even when the market's got its challenges. It really suggests resilience, building for the longer term. Okay, good context. So let's dig a bit deeper then. Unpack those financials. That $363.2 million revenue figure, it included $40.4 million from something they call safe harbor. Now, for anyone not familiar, safe harbor basically means they pulled some sales forward, locked in older tax rules that were maybe more favorable.
Practical move. Smart, optimizes the incentive.
Exactly. But you got to remember, it kind of impacts future comparisons, right? It's not necessarily ongoing revenue. Now, that non-GAAP gross margin, 48.6%, slightly down from Q1's 48.9%. But here's the really interesting part. That number includes a hefty $41.5 million in net benefits from the IRA.
Yeah, the Inflation Reduction Act benefits.
And it still absorbed a 2% hit to the margin because of new tariffs. That's pretty impressive juggling.
It really is. Shows some strength there.
And on expenses, they showed good discipline. Non-GAAP operating expenses actually decreased slightly to $77.8 million. That's down from $79.4 million in Q1.
Always good to see cost control.
Definitely. And all this flows down to non-GAAP income from operations of $98.6 million. That's up from $94.6 million last quarter, which, directly fuels that $1.69 non-GAAP diluted EPS we mentioned earlier.
Right.
Cash-wise, they look solid. Position stayed flat at $1.53 billion in cash equivalents and marketable securities, and they're returning value to shareholders too. Bought back about 73,000 shares for $30 million in Q2. Still got $268.7 million left on that repurchase authorization.
Absolutely. And if you map those financials onto what's happening operationally, you see the strategy clicking into place. I mean, they shipped 1.53 million microinverters and almost 191 megawatt hours of batteries. Big numbers.
Yeah.
But the real story, I think, is the U.S. manufacturing angle. Get this. About 1.41 million of those microinverters shipped from U.S. contract manufacturers.
Oh, that's nearly 90%.
Exactly. And why does that matter so much? It's the 45X production tax credits. That domestic production qualifies them, giving them a significant cost advantage.
It's a massive edge. And it's not just micros. Domestic battery production ramped up, too, almost 47 megawatt hours. The IQ Battery 5P is being built stateside using U.S. components. They're securing over 45% domestic content.
Which helps with the ITC bonuses, right?
Precisely. And think about the tariffs again. They initially thought Q3 margin could take a 6-8% hit. Painful.
Yeah, that sounded rough.
But they've improved that outlook now to maybe 3-5%, even with new tariffs factored in. That shows some serious supply chain agility diversification.
Okay.
Plus, they're working on getting non-China cells by year-end, for FEOC compliance, staying ahead of regulations. Oh, and don't forget customer service. Global NPS, Net Promoter Score, up to 79%. And call wait times down under 2 minutes.
1.8 minutes, yeah. That's got to make installers happy.
For sure. It builds loyalty.
Okay, so this is where we see the strategy forming. Let's pivot to the management view. What are they seeing in the market and how are they positioning Enphase? The U.S. market, maybe surprisingly, showing signs of improvement. Battery attach rates are climbing.
And management expects a pull forward of demand. People rushing to install before the 25D homeowner tax credit changes. Probably see a bump in early Q4 from that.
Makes sense. Get it while getting's good.
Right. And then post-tax bill changes, they see things shifting faster towards leases and PPAs, the third-party ownership models.
It's supported by that new 48E tax credit, right? That runs through 2027.
Exactly. Provides longer-term certainty. And batteries, they're becoming just central to the whole solar sale now. Costs are coming down. Tax credits are there through 2033. It's becoming a standard part of the package.
It really is shifting from an add-on to a core component.
Enphase says they've got healthy market share with both cash and loan customers and also the TPO side. But here's a big number. Management projects a roughly 20% drop in the U.S. residential solar total addressable market, the TAM, in 2026.
Wow, 20%. That's significant.
Yeah, because of that 25D expiration, they see the market shrinking from about 4.5 gigawatts maybe down to 3.5. Lease market might grow a bit, but the cash and loan side contracts quite a bit.
Okay, so that explains the focus on leases and TPOs then.
Totally. And channel inventory for microinverters. It's a bit high now, but they expect it to normalize by year end, partly because of that 25D pull forward clearing things out.
Right. So the big question for you listening is, okay, a 20% market shrink is predicted. How is Enphase actually planning to deal with that? Management laid out 3 key pillars. First, help the long tail installers, those smaller guys, access lease financing by partnering with TPOs. Give them the tools.
Empowering the smaller players.
Exactly. Second, keep hammering down installation costs through product innovation. Make it cheaper and easier to install Enphase gear.
Makes sense.
And third, tackle customer acquisition costs. Those are high across the industry, like $0.70 to $1 per watt. They want to bring that down.
And importantly, they stress they're not using their own balance sheet for the financing side, right?
Correct. They're leveraging relationships, data on installers, facilitating things, but not taking on that direct financing risk themselves. It's a smart capital-light approach. And they also made a point about cost control being continuous, not just a reaction, but an ongoing process, tweaking expenses without hurting R&D or customer service, adapting constantly.
Okay, so they're playing defense on the market size, but definitely playing offense with the products. That roadmap sounds pretty aggressive. What are the highlights there?
Oh yeah, definitely aggressive.
IQ batteries, for instance. Gen 4 started shipping in the US in June, offers 30% more energy density, takes up 62% less wall space. That directly cuts installation costs. Huge for installers.
Big improvements.
But get this, Gen 5 is already in the works, aiming for a 50% jump in energy density and a major cost reduction, expected in about a year.
50%? Wow, that's a leap.
Right, shows their long-term thinking. Then microinverters, the IQ9, that's their next big thing, full production Q4. Uses gallium nitride, GaN technology. Supports higher power panels.
Okay, faster switching, more efficient.
Exactly. And crucially, it lets them serve 480-volt, 3-phase commercial systems in the U.S. for the first time. That unlocks a whole new 2-gigawatt market opportunity for them. Game changer for entering the commercial space.
Okay, that's a big expansion of their addressable market right there.
Totally. And they're not stopping there. New markets, too. IQ balcony solar, shipping now in Germany, Belgium. You can literally plug 1 to 4 panels into a wall socket, no permits. It even has sunlight backup. Pretty neat.
Huh. Interesting niche. Very European focus there initially.
Yeah. And portable power, the IQ Power Pack 1500, that's direct to consumer, diversifying. And EV charging. The next-gen IQ EV Charger 2 is out in 18 countries. Plus, the bidirectional charger is coming mid-2026. Vehicle to home, vehicle to grid, turning your car into a home battery, basically.
That V2H and VDG capability, that's potentially huge for home energy management down the line.
Definitely feels like they're building a whole ecosystem.
It's not just the U.S. either, as you touched on. Their global strategy seems pretty well thought out. Europe, for instance. Revenue up 11% in Q2, sell-through up 5%, even with tough market conditions there.
Yeah, it's strong considering the headwinds in Europe.
Right, and specific countries show interesting things. Netherlands, net metering ending is pushing battery adoption, creating this big virtual power plant opportunity. Enphase wants to aggregate home batteries.
Ah, selling power back to the grid from homes.
Exactly. France, expecting a VAT cut to boost demand, plus batteries are popular there already. Germany, seeing momentum with the new battery, the EV charger, that balcony solar product. UK, strengthening ties with energy retailers, adding battery backup soon. And then beyond Europe, Australia, new battery rebates are driving interest. IQ Battery 5P launching soon. India, steady growth. IQ 8P works well there. Japan, long-term play, introducing products now, batteries planned for next year.
They really are spreading their bets geographically.
Yeah, seem like a core part of mitigating risk in any single market.
Okay, so bringing it back to the near term, what's the guidance for Q3? What should we expect? Revenue guidance is $330 million to $370 million. They said about 75% of the midpoint is already booked.
Okay, decent visibility there.
Battery shipments projected between 190 and 210 megawatt hours. Pretty similar to Q2. Non-GAAP gross margin, here's where you see the tariff impact, guided between 43% and 46%. That reflects that 3-5% tariff hit we talked about.
Right, so margin pressure acknowledged.
Yeah. Net IRA benefits expected between $34 and $38 million based on shipping about 1.2 million U.S.-made microinverters.
Still a significant boost from the IRA.
Definitely. And non-GAAP OPEX guided between $78 million and $82 million, keeping costs generally in check.
So putting that guidance in context, what it tells me is Enphase is being realistic about the current environment, the tariffs. But their response isn't just slashing prices. It's about that strategic agility, right? Doubling down on innovation. The new products, the IQ9 opening up commercial, the next-gen battery aiming to cut costs. That's how they plan to navigate this. It's a focus on margin and market expansion, not just volume.
Yeah, playing the long game, it seems. So stepping back, what's the big picture here for you, our listener, whether you're an investor or just watching the clean energy space? Enphase is clearly executing a complex strategy. They're trying to lead through major shifts, the move to leases and PTAs, batteries becoming essential, the need to cut those soft costs.
Right.
And that relentless product innovation, the IQ9, the Gen 5 battery, it feels like they're trying to fundamentally change the cost equation and grow their potential market.
Which leads to a really interesting question, doesn't it? If that U.S. residential market does shrink in 2026, like they project, how effective will this diversified portfolio, the global reach, the focus on installers, how effective will that be in actually maintaining growth or gaining share?
Yeah.
Can they really offset a 20% TAM reduction just through better execution and new products? That's the key thing to watch, their ability to use partnerships and innovation to navigate that contraction.
Absolutely. Which brings us nicely, perhaps, to our speculative fun segment. Remember, this is absolutely not financial advice. Just an outrageous but maybe plausible trade idea sparked by this deep dive.
Okay, let's speculate then. Given everything Enphase laid out, their detailed plan to handle that potential 20% TAM reduction in U.S. residential solar for 2026. How about this for a pair trade? You could consider a short position on some U.S. residential solar installers, specifically those heavily reliant on the old cash and loan model, maybe lacking strong TPO partnerships or significant product differentiation.
Okay, betting against the traditional players struggling with the shift.
Right, and pair that with a long position on Enphase Energy itself. The thinking is, Enphase, with its full stack, hardware, software, financing enablement for the long tail installers, plus that aggressive product pipeline like IQ9 and Gen 5 batteries aiming for lower costs, they seem uniquely positioned to actually gain share during the shift to lease PPA models, even if the overall market shrinks a bit.
So betting on Enphase's adaptability and strategy versus less agile competitors in a tougher market.
Exactly. It's a bet on their resilience, their strategic maneuvering, their innovation pipeline against players who might be caught flat-footed by the changing landscape. A challenging environment, yes, but one Enphase seems prepared for.
Interesting thought experiment. Again, definitely not financial advice.
Okay.
That wraps up our deep dive into Enphase Energy's Q2 2025 earnings call.
Yeah, I think the key takeaways for me are Enphase's really strong execution on these strategic shifts. The product innovation is impressive, the supply chain resilience they showed is notable, and they seem very proactive about market changes both here and overseas.
Agreed. And remember that trade idea, purely informational fun. Always do your own research and due diligence. So what stood out to you from this deep dive? Something to think about is Enphase's long-term vision for distributed energy. How might their current strategies play out over the next few quarters? Thanks for tuning into the deep dive. We'll be back soon to crack open our next source with you.